Here to discuss where to find opportunity amid the volatility is Shannon Saccocia, Boston Private Wealth CIO, a CNBC contributor. It's good to see you, Shannon. Thanks for being here tonight.
Thanks for having me, Scott.
We heard from Jim Lebenthal on the halftime show today, one of your investment committee colleagues, who said this is capitulation, this is what it feels like, and he was a buyer. Were you?
Well, we don't have a lot of cash in our portfolio. We added some names last week, but I would be if you have cash in the that's not in the market right now. I think that there are certainly some opportunities here to be adding to names in certain sectors and industries. And I feel like Jim stole my thunder a little bit right before this, but there's definitely an opportunity here for, if you look out over the course of the next 12 to 18 months or so, Scott, there are some great companies that have been sold off significantly, really starting back in November, that are opportunities to add here.
Yeah. What do you think? Jim, right? I think committee members are certainly listening closely to the kinds of stocks that you're looking at.
Well, I'm blushing because she does fantastic work. I know her from your show, and it makes me feel better. I mean, actually, when you're out there saying things are good, and she has stocks, and she talks about, say, an Adobe or an Alphabet or Meta or a Visa. These are companies, these are very high-quality companies whose multiples have shrunk dramatically. You could argue that Visa's a little too high, but they've come down a lot. And I think, Shannon, one of the things that people have to start thinking about is when you have a stock that's down 200, 300 points, a high-quality stock, it isn't like we should just wake up today and say, oh, my God. I mean, wasn't it the right time when it was up like 300 points from here?
Well, I think, Jim, you make a great point. I mean, the fundamentals have certainly changed in the market, right? I mean, we're facing down a Fed. If we go back to 2015, this feels really similar to some of that pain that we had. But if we go out 12 months past all of the rate hike, the first rate hike since 1994, 12 months out, we've got positive returns. Now, I don't think we're going to turn on a dime here. Names like you said, names like Adobe, Salesforce. But then you think about things like geopolitical risk, like an L3 Harris. You've got opportunities in financials and the exchanges with all of this volatility, ICE, CME. I think there are places here where you can play a little bit of combo defense and offense and not necessarily have to be really focused on these low margin or no margin high growth companies that are down by those significant declines to still situate your portfolio appropriately for 12 months from now when, oh, by the way, inflation will be better and we're still going to be growing above the pace we were at in 2019.
You know, Shannon, it's interesting, as you say, Salesforce, which we obviously know how much Jim likes the company and Mark Benioff and the like. It makes me think of higher multiple stocks. You know, as much as you love companies like that, are you thinking about stocks like that have gotten hammered, and many of them much worse than a Salesforce, for example, even though that stock has been hit like a lot of others, and thinking that eventually these kinds of things are just too good to pass up?
Definitely. And you've seen the slow decline, especially in the cloud stocks over the course of the last few months. And if I look out over the next 2, 3, 5 years, Scott, I don't see a situation whereby we don't at least see growth in both cloud and hybrid compute that would point to adding to these names today. Now, are you going to put, if you're 100% cash on the sidelines, do you go all in tomorrow? You probably want to be a bit more measured than that. But putting an initial position, particularly in some of these cloud stocks or some of the other names that have sold off in these, again, focus on margin, focus on growth with margin, focus on free cash flow. Those are the areas that are going to continue to be a great part of the portfolio. Dividend yield. Jim talks about dividends all the time. We love dividends. And I think that that's a great way to balance, as you said, some of these names that have been sold off with some of the things in your portfolio that you probably are also looking at from a cyclical perspective.
The comeback obviously felt great today, but our stomachs are still feeling a little bit upset. I'm sure you can understand that, and maybe you have the same kind of feeling as well. So with the Fed now on the horizon and the two-day meeting set to begin tomorrow, what will you be listening for, perhaps closer than anything else?
One of the things that we've seen over the last few weeks, Scott, and you can see it in the data, is we have seen some, modest softening on the economy. I don't think that changes the Fed's stance, but perhaps it keeps them from being more hawkish than they would have been otherwise. I think that people who are looking for them to come in and bail out the stock market right now, that's not going to happen. But we have seen some weaker data, albeit not what we saw from the Delta variant based on Omicron. And so if we get a measured statement from the Fed, again, I think this is either really no impact to the market, which would be great, or a negative impact to the market. I don't think there's a whole lot of upside surprise that's associated with Powell on Wednesday.
I appreciate your time this evening. I know I'll see you back on our halftime desk at some point this week. Shannon Saccocia staying up late for us.